Welcome back to It's Only Money here on Real Radio 104.1 with financial advisor Scott Brown of Edgewater Family Wealth. EdgewaterFamilyWealth.com is the website. I'm Ryan from the Monsters, and Scott's right-hand man, Tammy, is here as well, also of Edgewater Family Wealth. Good morning, gentlemen.
Good morning.
Good morning.
Man, it's been a week. The market has been what it is. We got people telling us all kinds of things left and right, but I come to you two to give me the real facts, the real answers, and I hope you have them for me today, Scott.
Well, if we don't, we'll make them.
But we're going to start the way we always start, where we have Tammy, for all the finheads out there, giving us the numbers.
All right. Yeah, good stuff. I enjoy this tune, man. It's really cool. Good start for today. So the big news today is the GDP. We see a decrease, almost 1% down, but that's an advanced estimate, so we don't know for a fact until next month for sure. But it's a good news actually, although it is shrunk. But this is by design.
I tell my fiance. Oh, sorry.
Hey!
Really Scott show already.
Cut that thing out. All right. Yeah, it's good because it's by design supposed to do that.
Yeah, well, that's the drug-induced coma we're in, right?
Mm-hmm.
The Fed is raising rates in order to do. It's interesting, right? Because historically, with unemployment as low as it is, because we're in the 3.5% range still, which is historically low. So we don't typically see recessions when unemployment is in this area. So it's a bit of an aberration, I think, to find that we're technically in a recession.
Mm-hmm.
I mean, really, like you said, we don't even know. I mean, these numbers that came out today have to be verified throughout the month. I suspect that, it'll probably prove to be true. Technically, we are in a recession, but we're seeing a couple of good signs in the economy. I drove home from South Carolina literally a couple of days ago, and as I was coming in, I noticed gas prices regularly below $4. So we're starting to see that kind of being backpedaling from the $4.50, $5 gas we were seeing just a month or two ago. So that's good news. Unemployment is at a good spot.
It is.
And I think that that's also helping people with their wages. We're seeing a lot of inflation in wage, standard wages, which is a good thing. Then you'd say, well, inflation's a problem at 8%. If wages are only going up 5%, then the earners are still in a little bit of a deficit. But the reality is we're starting to see the inflation number come down.
Let me ask you this, because I've been hearing this on the news. And what version of plateware is the best version of a recession? Because that's what I've been hearing. It's like they've been comparing it to various bowls and spoon. And the most recent one I heard was like, this one's going to be like a pasta bowl.
I heard that too, and I didn't follow up on that. I had no idea what that means.
I don't know what that means.
So this isn't financial jargon that everybody knows.
I feel like this is it bow tie pasta? What are we talking about here?
I don't know.
It said long, flat bottom is what I think they were going for.
I gotcha.
But they said it wasn't so much like a pizza tray, more like a pasta bowl.
Now, do you eat pasta out of a bowl?
If I serve pasta out of a bowl,
But do you eat
onto
it
a plate?
Out of a bowl?
No.
See, I don't either, so the whole analogy's lost on me. I'm very confused by this.
Oh, wow. I just know ravioli. That's all.
Okay, so bowl-based analogies are not for everyone in the financial world.
No, that's obviously at a higher level than we're on this show.
Way above our level here.
Yeah.
So recession, though, yes?
Kind of, sort of, technically.
Yeah.
Wouldn't you agree, Tammy? We're technically, the definition of a recession is 2 down quarters in a row.
Exactly, yes. But earnings have been good the past
they have.
2 months.
Yes. 2/3 of companies reporting have beat.
Yeah.
Yeah.
Exactly. And now some companies in the tech sector, they're not beating, but they're very close, which is still a good sign. So we're not seeing half or quarter of it.
Yeah, again, with the unemployment being where it is, the consumer's still fairly strong. One of the things I noted was the M2, now we're going to get a little funky here, the M2 money supply, which is basically the amount of money flowing into money markets and savings accounts, liquid money, right, at banks and places like that. The growth on that slowed, which is a non-inflationary trend, meaning that, again, the Fed's movement here, whether you think it was too late, I happen to think it was too late, but we're all backseat drivers at this point. Whether you think it was too late or not, the reality is it is starting to grab hold, and it is starting to rein in inflation, and we're seeing it in numerous areas.
And to that point, they just increased the Fed rate another 75 basis points.
Which I like. I think the idea that the Fed still has, ammo to use if things turn south very south on us, they have something, because we were getting to the point where zero interest rates, what do you fix, right?
Mhm.
You know, if things go awry, like say, I don't know, a pandemic might occur, right? If something like that were to occur at zero interest rates, well, you can't go down, you could go negative. I in some countries have, but I'm not a big fan of that idea either. So I think now the Fed, you know, is getting their act together, and like government is wont to do, whether we like it or not. They fixed yesterday's problems today, but it's better late than never in this case, I believe.
Mm-hmm.
Now, is this recession, though, I've heard, because I do studying, because I try not to sound like an idiot on this show, but my understanding is
How's that working?
This, a little better and better each time. And that this version of a recession is based on more of a supply side problem. Like we're not making enough stuff, so the demand for that stuff higher, and the Fed actually has less control in a situation like that.
Yeah, I mean, I think supply chain, which is a word you hear, or words you hear bantied about quite a bit. It's an answer to just about every supply chain.
Yeah.
I don't know, why did my team lose? Supply chain.
Supply
The
chain.
Braves lost because of supply chain. But no, I think it does play a role, maybe more of a role in inflation than recession. And then the question is, does inflation lend itself to recession, right? So, I mean, it's a chicken or the egg kind of thing. Supply chain, somewhere in that formula for sure. It's problematic for sure for inflation and pricing. Would you agree with that, Tammy?
Yeah, there is also, if you read the Fed statement every time, they release, say, whenever they increase their interest rate or on a monthly basis, they would be saying what they're looking after. So in this case, it's purely inflation. 9-10 months ago, it was unemployment.
Right.
They literally said, we don't care about inflation. We are just targeting unemployment.
Right.
Now it's the opposite.
Well, and I think it's largely understood that those are the two mandates of the Fed, right? Control unemployment and control inflation. And a lot of people would assign them other things and want them to do political things, and we can argue whether that's true or it's not. But the reality is the two assignments they clearly have are managing unemployment and managing inflation.
Pretty much.
So what else you got for me? I mean, what's growing, what's not growing?
Right. So quick touch on commodities. Everything is down. That's good.
Yep.
So all the agriculture.
Unless you sell commodities. Then that's not as good.
Even on the year, like copper and aluminum, they are on the year, they're down.
Yeah.
That's good. Precious metals, all of them down.
All used in commercial or industrial manufacturing. So those are things that go into batteries, things that go into cars and aluminum, whatever it is.
Exactly. Chips, cars, you name it.
Yeah.
Precious metals, gold, silver, and platinum, all down. Year to date and in last month. Those are.
So Ryan, that side gig you had spinning that big arrow in front of the gold shop, I don't think that's happening for you.
Yeah.
That's too bad. But I mean that comes in cycles, But the comedy will come bad. The Mad Max people will come and buy the gold in no time.
Yeah, that's true. They will be the Road Warrior people showing up to buy the gold when things go south again.
With the great outfit they have. Right?
Yes, and their fancy cars.
It's in the Florida heat too. Oh, I don't know how tough times are where that's what you got to do. But shout out to all the gold sign spinners out there.
Oh, I love those guys.
Or you ever see my favorite Statue of Liberty? Paint melting off their face.
Is that the tax people?
Yeah.
Yeah. I don't know what the Statue of Liberty has to do with taxes. How did that become the mascot for tax people?
I don't know that.
Well, the marking on the Statue of Liberty is just send us your poor, send us your tired, send us your taxes.
Yeah. Oh, I do.
A lot of people leave that part out.
A lot of people don't know that. The nuance of that slogan. Yes. Thank you for pointing that out. So,
I don't know that. Crude oil, to your point, is down too on the month. And here's the interesting one.
I did that.
I did that.
On the way from South Carolina.
Yeah, I did it. Yeah, you're welcome.
Thank you, Scott.
You're welcome.
So the interesting one is natural gas. For the entire year, it was almost no change.
Yeah.
But just last month, it went up 100%.
Why is that?
Well,
Putin?
Well, yeah, Europe.
Yeah.
And to that point, here's an interesting thing happening in Germany now. Some cities are, they decided that hot water will not be available in public buildings.
Ruh-roh.
They cut all that for gyms. They also said that 15% down on all natural gas consumption between April and November.
They're going to ration, so to speak.
Yes.
Yeah.
And all that has to do with, the whole thing that's happening over there and the fact that the Germans always prefer to use gas instead of nuclear energy like the French.
Yeah.
The French are not having that problem.
Yeah. So do you think they have a sticker for Putin that they put on natural gas stuff? I did that.
But I was reading like Russia cut off Europe from all their gas, right?
Kind of, so.
Not
See,
completely,
that's always
but
the
mostly.
It's like,
yeah.
it may, like for us, for a lot of stuff they did, but for some stuff they didn't. It's all very confusing.
It is. They got to keep enough money flowing to keep, it's kind of like it's us against the world, but we'll still sell you some stuff. That it's
we
kind
still
of
need your dollars.
Yeah,
right?
yeah, we still need some money. So, it is a soft closing, if you will, of trade between Russia and other nations. I mean, natural gas is a viable substitute for petroleum, but unfortunately, I think Russia is a big seller of natural gas as well. Yes.
Yes, we don't have the problem here as
Yeah.
much as Europe,
Yeah.
especially during winter.
Yeah.
And we have a very friendly neighbor to the north in case
We
need
do.
anything.
We don't want to upset the Canadians.
No, I mean, we really don't want to upset us, but
We
we,
do, well.
pretend like they're in charge. It's like
We
it's,
like them. They're
it's
nice
like
people.
when you drive a car and you got a little kid and they have like a little toy version of the steering wheel.
Yeah.
And you're like, yeah, you're driving the car. Here,
Yeah.
look at you
You're
driving
like the
car.
U.S.
You ain't
Yeah,
driving the car.
Yeah. I mean, we do make fun of their quote-unquote bacon, but other than that, they're pretty decent people.
Well, if you want to save more than your bacon, go to EdgewaterFamilyWealth.com. That's the website to go to. You can also email us, EdgewaterFamilyWealth@RaymondJames.com, if you want to hear your questions on air. And we'll be right back with more It's Only Money here on Real Radio 104.1. Welcome back to It's Only Money with financial advisor Scott Brown of Edgewater Family Wealth. I'm Ryan. Tammy is here as well. And as we left the last segment, we were still in the numbers.
And the day begins, right?
People start their Sunday like this. You can set their clock by that song now.
That's what I heard. So, stock market, that's the big one here. What do you think the best performing sector was for the last month? 1, 2, 3.
Energy.
Wrong.
Oh.
This time is wrong. It was right, although, for the entire year. But now it's tech, actually.
Really?
Yeah, tech.
So you saying stocks are cyclical? Is that what you're trying to tell me?
Apparently, some people
Yeah,
say that.
who knew?
Right.
Mm.
No. And speaking of tech, we had some good earnings for the month, like Tesla. Microsoft had its earning also a couple of days ago. It wasn't as estimate, but it was very close. So that's also good news. The next one is industrials. So those are the best performing sectors: consumer discretion, tech, industrials, and one of the worst ones for this month is energy.
Yeah, well, I mean, that's not surprising. It's come through a pretty strong run. What's the exciting, and I just did read that industrial production year over year is up like 9.7%. It's actually above 2019 numbers. So domestic U.S. industrial production has improved quite a bit. I think there's a lot of reasons for that, but I think that's all the exciting news. Ryan, do you have any stock questions?
I mean, my only question would be my boy Elon. He loves a good meme stock like I do as well.
He is a meme stock.
He is a meme stock, but he can move them around at will like a superpower.
Yeah.
But I really kind of don't understand what's going on with the Twitter deal at this moment.
Yeah, so the Twitter deal has come unglued, and I feel like somebody may have predicted that.
I wonder who.
I wonder who. I guess we could go to the tape from June 3rd and find out.
Oh my God, who is that? I want to know.
I mean, you have that?
I do. I happen to have that right
Oh,
here.
gosh, I didn't know.
So this is Scott talking about Twitter on June 3rd. Check it out.
I was looking at Twitter at the end of the week, and I was noting that the stock. Where's the stock right now, Tammy?
Like 42, 41, 42.
41, 42, and so the execution price on Musk's easy for me to say deal is 54, 55, 56, somewhere in there, right? That's the offer.
54, yeah. The offer that he made was around that.
Yeah. So what does that tell you about the market's opinion of this deal going through? What does that tell you? The market doesn't think this deal's going through. Is that a fair thing to say?
In fact, I think the market thinks the deal is going through.
Oh, you're going to go against the grain here.
Well, that's because again, it's Elon Musk. There's a lot to do with that. He usually the consensus goes as the person who eventually does everything he says he will. He had all these great successes from SpaceX to Tesla to now Starlink and so forth. So they think, yeah, he's into it. He wants to take it for his own reasons. We don't know why. And they think it's going through.
For spaceman reasons. So here... So
wow, that sounds very familiar.
Yeah, I don't know who that other guy was. That was the counterpoint to my brilliance, but he's now left the studio.
Wow.
Yeah. So I mean, that was kind of my point back then. We'll talk about the stock right now, and I'm not. This is, by the way, I'm not advocating for buying Twitter, not buying Twitter, Tesla, or anything else other than I'm just amusing myself right now. So rarely right, I thought I'd just dig into that. But, you know, the reality is that the market was telling us something. And if the execution price at $54.20, which was his offer price, it's at $54.20. So you say, well, the stock's, if the deal's going through, the stock's $54.20. That's the price, right? But the market was trading at some points around 36 or 38 after he announced the deal. So it told you that the market participants in that stock just didn't believe it was going to happen. And there was a lot of noise to that effect that, you know, he's brilliant, but he's impulsive. He's smart, but he's not always thoughtful, right? And that was my point, is I don't think because think of the amount of stock he would have to leverage, how much pressure that would put on the golden goose, right? Because Tesla's the golden goose.
It is.
And he was really putting a lot of pressure on the golden goose, which makes two groups of people unhappy. It makes the Twitter shareholders who he's blasting the company the whole time, and it makes Tesla shareholders upset because it's putting pressure on the stock that he might have to sell some or borrow against it. So that is why I didn't think the deal made any sense. Now, here's the issue. The stock has gone up quite a bit, I think over 20% since they killed the deal, quote unquote, right? Since he said, I'm out. I don't want to do this because there's bots in the system, which if anybody knows there's bots in the system, it's him. He knew that going in. But now he's going to court in Delaware, which is like only 4 or 5 weeks away. It's a very short process. There's no jury. It's just a couple of judges, I think 3 judges, view the case, and in 4 days they rule. And if they rule he's got to pay up, then that's $54.20 a share, right? So the stock is moving up because people who are trading the stock, I believe that he's going to pay something. It may not be $54.20. They may negotiate it down to 50 or 48, but that stock is moving up, not because Twitter has become a much better company over the last few weeks, but because there are traders out there who think, well, this guy's going to pay something. Might be $5 billion, might be $10 billion. Might be the full 14. The judge may say, no, a deal's a deal. You have a contract. You're going to pay the price you offered to pay. I don't think that's going to happen because I don't think, to quote Scott Galloway, who's an NYU professor who I was listening to the other day, he doesn't believe, and I don't believe, that either participant wants to be in business with the other, right? Twitter doesn't want him to be the head of Twitter, and he doesn't want to be the head of Twitter, right? He wants to go back to dealing with SpaceX and things he's good at.
So buyer's remorse.
He had immediate buyer's remorse. Immediate. And you know, again, he's impulsive. He likes to see his name in the headlines, and he got a little carried away because he's been awfully quiet since a lot. So hopefully somebody's gotten into his ear and said, "Listen, man, you need to calm down."
So he can be definitely forced to buy it at the price he set it.
It's not out of the question.
That's interesting. The gambler in me is like looking at this $40 Twitter price and going, I could make a bunch of money right now.
Again, that's an unknown. I'm not advocating for that. I'm not saying
this isn't
that
financial advice. This is me just talking out loud and seeing what Scott's eyebrows do.
Yeah. You're making me nervous. But, you know, in other news, I heard today that Jetblue is trying to buy Spirit Airlines, which is disappointing because I just love the lawn chairs in the sky. And that might go away if I mean, have you flown on Spirit?
Oh, yes. It is just the worst.
Yeah, it's like, those old lawn chairs your folks used to have at picnics, and the straps would be half broken and they sat too low, and like your knees are in your face on the Spirit. You're a tall guy,
and
Ryan.
Every bag costs $100 to get on that thing.
Yeah, the flight's $50, but everything else is peanuts are $75.
Peanuts? You got peanuts?
They were $75.
I just had a lady spit in my mouth, and she's like, "Good, drink up." Not good. It would be the equivalent of like, "Hey Ryan, I'm starting a business. Oh, what is it going to be?" Well, I got this tire fire over here. That's it.
That's my business.
The whole business.
I burn tires.
And I don't know, profit.
Yeah.
It's a weird one though too, because JetBlue is better. It's better on JetBlue, but it's only like a few notches up.
Well, at least they'll upgrade some of the lawn chairs, and I don't know if does that mean the yellow goes away, because those Spirit planes are pretty recognizable. So.
Well, they have to be so you can find them.
Yeah. Well, they're at the far end of the airport where nobody goes, where you're burning tires, apparently.
Exactly.
Explains the smell.
Yeah. So I think that puts a bow on our numbers for the day. One of the things I wanted to talk about, Ryan, and you and I always talk about habits. What is a habit? How do people get in good financial habits? I was reading something the other day that neuroscientists believe we make about 70,000 decisions a day. And 94%, how they come up with 94% or 70,000 for that matter, I don't know, but it sounds good. We make 70,000 decisions per day, and 94% of those decisions are based on habits. We get up in the morning, we immediately brush our teeth, we turn on the coffee pot, we turn on our favorite news, whatever it is. Most of us look at our phones, which, by the way, is a bad habit in the first half hour of the day, they say, because it sets the tone. Now you're reacting to the day from the start rather than being in control of your day. That's a whole nother self-help conversation we can have. But the reality is most of the things we do, 90% of the things we do, are habit. And so the question then becomes, well, people are on average in such bad shape financially. Clearly, those habits are not very good, and how do we change that?
Lock yourself in a room for 3 days and you reset yourself. I don't know.
Yeah, no, I don't know the answer either, other than it's a discipline, because we're all inherently lazy, left to our own devices. We'd rather sit around and eat bonbons and watch bad TV. But the reality is, people who are better at things, whether that's athletics, whether that's academics, whether that's money, they're not 100% better at stuff than we are. Their habits aren't guys who work out and are in good shape aren't working out 12 hours a day. They're just working out a half hour, an hour a day, whereas most people are working out none. So it's not like they're 100 times better. So my point is, you don't have to get way more disciplined. You just need to get a little more disciplined. And we can talk about that when we come back.
You're listening to It's Only Money on Real Radio 104.1. Welcome back to It's Only Money here on Real Radio 104.1 with financial advisor Scott Brown of Edgewater Family Wealth. EdgewaterFamilyWealth.com is the website. I'm Ryan from the Monsters. Tammy from Edgewater Family Wealth is here as well. And before we left on break, we were talking about habits, Scott.
Yeah, and you got to get some good ones. Again, it's. I think people, like anything, some people are yo-yo dieters, and they're eating a box of Oreos at one point every night, and then they just stop eating. Like, I'm not going to eat. I'm only eating lettuce. And they try that for about 3 weeks, and they lose 20 pounds, and then their mind explodes, and they go back to eating Oreos. It's not a binary conversation. Like with most things, it's nuanced. It's not. You don't have to never eat a cookie to be in good shape, right? You can eat a cookie from time to time. You just can't eat them for dinner every night, right? The same is true with your money. If you say, well, and this is something we were talking about on the Monsters the other day. We were talking about habits and how people get too gung-ho. They say, well, I'm not saving anything now. I'll save 90% of my paycheck. Well, that's ridiculous. You got to eat. You got to pay your rent. You got to put gas in the car. These are all real things, and they do that because they're trying to make up for lost time or make up for lost ground, and they overcorrect. It's like getting in a car accident. People get in most accidents because they overcorrect to a bad situation. So you don't want to overcorrect. What you want to say is, let's get better incrementally. Let's say we're saving nothing. How about we save $50 a month? And then somebody will say, well, $50 a month isn't going to get me anywhere. Well, it's going to get you $50 a month ahead of where you were, right? So at the end of the year, that's $600 you've saved. Maybe you earned some interest. Maybe there was some return on it. Maybe you earned 5-6%. No, that's not going to change your life, right? But what it will do is begin to form a habit. It's just like turning on the coffee pot in the morning. So next year, when you go to work on January 1st, you might walk into HR and say, I was doing 50. Can I do 100? Because now the 50 is just a habit. It's not. And what you're trying to do is develop disciplines that you can't wiggle out from under. Because we all favor today versus tomorrow, right? There's this present bias we have. We would favor eating a chocolate cookie today versus eating an apple because the chocolate cookie tastes good right now. Now, is it better for me to eat the apple long term, a week from now, if I eat apples every day instead of cookies? Yes, that's clearly a better thing for me. But right now, that chocolate cookie tastes real good. So you have to start to develop discipline slowly. Again, I don't think you go from 0 to 60 in anything, whether it's your health, whether it's your diet, whether it's your exercise regime, and it's certainly true of money. You can't just say, I save nothing, now I'm going to save 50% of my income, because that's a recipe for disaster. You're setting yourself up for failure. And I think partially maybe you're doing it on purpose because, long term it's a hard thing to do and you don't want to do it. So I think you got to do it incrementally and say, okay, we're just going up $50. We're just going to save $50 in the 401k. They're going to match it. That's great. It's cool. At the end of the year, I'll have $700 and no, my life won't change, but I'll develop a habit. The next year you go to 100. Now it's $1,200 a year. 10 years go by, you got 40 grand because you just started with the $50. And Tammy, a lot of times people say to me, well, I don't want to start with 50. I want to wait, Ryan, until I get to 500. When I can save 500, then it'll mean something.
Yeah.
Meanwhile, 10 years go by and you've saved nothing because you never got to the 500. So again, it's cliche, I understand, but Rome wasn't built in a day. People who are wealthy, I just read there's almost 1 million 401k millionaires in our country.
1 million?
1 million.
Wow.
Right. Fidelity alone has 500,000, right? So what I would say about that is that a lot of people, when they go into a 401k situation, they don't see it as an opportunity to become a millionaire. They just don't. It's like, this company has this benefit. I don't know if I like it. I don't like the funds. I don't like the guy who sells it. I don't like anything about it. Or maybe I'll put a little bit, maybe I won't, right? They don't really put a lot of thought into the idea. This is, for a lot of people, Ryan, this is the ticket. And it's boring and it's 401k and what the heck is that even? But again, it's, I laugh sometimes because it's free money that people will willingly turn down. They will willingly say, listen, if you make 50 grand a year, I'll put 3% of your salary into this. That's $1,500, right? And they'll go, I'm not Wait, what? So you just went to your boss and said, I don't want $1,500. Thanks, but no thanks. I know you want to give me more money, but I really don't want it. And people are cynical, right, about these. I don't want to give the company my money. Well, I got news for you. There is not an employer out there that's excited about doing a 401k for you. So that should tell you something right there, right? Because it costs them money. I don't know the math, but I'm going to guess, just from 35 years of dealing with it, is I would say the average 401k costs the average employer $1,000 or $1,500 a year to have, just to have it, right?
So just the matching alone in mind would be
not to mention administrative costs and having the gal or the guy come in and give you a bad breakfast sandwich so they can tell you about the plan.
Yeah, I love those meetings.
Yeah, so they have these. You've been to them. I've been on the other side of them. Here's your Chick-fil-A. But the reality is,
it's amazing what we'll do for a Chick-fil-A biscuit.
Yeah. People will sign up if you give them a Chick-fil-A. That's a true statement. But they'll sign up for just about anything if you give them a Chick-fil-A. But the reality is that it's a benefit that the company is giving you. Are some of them better than others? Are the matches better in some than others? Do some have better fund options or fund choices? That's arguable, I guess. But this is where people get wrapped around their own axles, is they're like, well, I don't like the funds. Well, first of all, what do you know about funds, right? You're not an expert in funds. You're an expert in whatever you do at that company, right? Just save. First of all, if you've got $5,000 in the plan, and the plan's free, and you're 60, and we double your money the next year, you still can't retire. You know why? Because you didn't save. You weren't disciplined. So I don't want to hear that the funds are no good or the fees are too... Listen, we could argue that, and there's some truth to some of that, but most of that is a BS excuse for you not to save. And if you're telling that to your buddies or your wife, I'm putting money in that plan, and you've got the 12-pack of Bush that you just brought through the door and the pack of cigarettes that you paid $8 for, you may want to rethink that conversation, because the only person you're fooling is yourself.
Yeah, it's hard to look at yourself though like that, and take a real financial inventory on like where you're at, because it's scary. Like it's scary because that is your future. And when a lot of people, I think, would rather stick their head in the sand and just go, everything's going to be fine, than ever plan.
Yeah, because the sad truth is the planning isn't hard. It's you could have a 15 or 20 minute conversation with yourself or someone you respect or a financial advisor or whatever it is, and get you. I think I could argue in an hour a year, you could plan your future. In an hour, I could do it for you. I could sit down with you and map out a plan, and know the plan isn't going to be perfect. And yes, next year when you come in, it's going to change a little bit. But these are the obstacles people put in front of themselves. They put these little things in their way so they don't have to act. Mm-hmm. It's the ultimate procrastination tool. We used to make fun of my son. We were always worried that he would survive in life, because I remember he was like 7 or 8. He walks into our bedroom. He's like, I can't get into the bathroom. And we're like, what are you talking about? He's like, well, there's a laundry basket in the way. He literally couldn't figure out how to get, till one of us came and moved the laundry. Now the boy's functioning now, so don't worry, everybody. He's functioning now. But I thought to myself,
he's still outside that bathroom, waiting to go.
Yeah, he's still holding it.
45.
Yep. He's still hasn't figured out how to move the laundry. And we put laundry baskets in front of our bathroom all the time for ourselves, right? And that's a
super specific metaphor, but I know what you mean.
Specific. So stop doing that. We make things complex that aren't complex, and we do that to keep from participating, to keep from being disciplined. It's hard to lose weight. Let's make it complex, right? It's in my genes. It's in my cells. It's the bad food that I can't get away. No, you just don't want to do the work, right? We're all there.
So people need to go like on a financial diet as well, I think, because if you look at somebody's finances a lot of times, like, oh, I never have any money. And I'll look around their house or at their car, and I'm like, this is why you don't have any money. Look at all this stuff. You don't need this. You need to go on a financial diet, have a little caloric intake on your stuff, and maybe you could turn things around and take some of that money and do it. But I think they're always, every time I talk to somebody, they're always like, it's too late. I'm 39 years old.
Oh, for crying out loud.
I'm not going to save now for retirement. I'm just going to keep on working. But 30, like, what age is literally too late?
Never. It's never too late. And again, one of the things we talked about the other day on the Monsters is that I'm not an advocate for a binary conversation, because retirement, I think, is changing. I think it has, in fact, changed. I see that with my clients. Is that we're not doing the back-breaking, most of us, farm work that our great-grandparents did, or even our grandparents, and where your dad worked in the coal mine, or your mom was standing up doing some kind of sweatshop-type labor. Their bodies broke down, and understandably, right? They did hard physical labor on average. That's what regular people did. We don't, on average, do that anymore. And so if you're an attorney, or you're a doctor, or you're an engineer, or you're a radio show celebrity.
Hell yeah.
Mm-hmm. You're not out in the, you don't have a shovel in your hand. You're not pounding concrete. You're not doing heavy, hard, backbreaking work. And my point in all of that is that maybe you don't completely retire. Maybe you contract back and work 20 hours a month, and that provides you $10,000 a year in income, and then you have Social Security for another 30, and then you got $500,000 saved, so that's $25,000 at 5%. Now you're at $60,000-$70,000 a year. Life is good. You got something to do to keep your mind busy. You're not just yelling at kids to get out of your yard. So there's lots of good benefits from a thoughtful, well-planned out retirement.
My whole retirement plan is to just yell at kids to get out of my yard. Like I've done good enough where I have a nice
yard. You wouldn't be the first.
Yeah. Good time. Well, if you want to find out more information on how you can retire, go to edgewaterfamilywealth.com. They have a ton of stuff there. They've got blogs. They've got the financial news with Tammy for all the fin heads out there. All the past shows, things like that. So edgewaterfamilywealth.com is the website. The email is edgewaterfamilywealth@raymondjames.com. And we'll be right back with more It's Only Money here on Real Radio 104.1. Welcome back to the final segment of It's Only Money here on Real Radio 104.1 with financial advisor Scott Brown, and his right-hand man, Tammy, is here as well. I'm Ryan from the Monsters, and we're closing out this beautiful Sunday with the email part. Scott, we get emails, which you can do by sending the email to edgewaterfamilywealth@raymondjames.com. Are you ready for the hard and fast questions that are coming at you, Scott?
I am so ready. Maybe.
I like this one. It's to full disclosure. It's Sunday morning. None of us won the lottery. But Ashley from Thornton Park wrote in, Scott, I know you don't play the lottery, but it is $1 billion. Do you play when it gets that high?
Is that real? Is it really $1 billion?
On Saturday, it was $1.02 billion.
What lottery is that?
The Mega Millions.
Oh, I don't even know what they are.
That's how much you don't play the lottery?
I know nothing about the games or what the pots are, because there's like different. Is that a national thing?
So the Mega Millions is a national one. It's the same thing as like the Powerball, which is also national. It's just a different company that does it.
Yeah.
And right now, Powerball's $720 million.
Yeah, that's hardly worth your time.
And right now, the Mega Millions was the fourth highest lottery that there had ever been.
Yeah.
And it was at $1.024 billion.
$billion.
Yes.
So when the price is higher, does that mean there are more participants?
I think so.
Yes.
So your odds go down, right? The larger the pot.
Well, your odds are the same, but what you're going to win, the odds are going to be higher, that it's going to be lower than the full billion.
Than the full pot.
Yes. Because I think your odds are already at 1 in 342, and I've never researched this. It's 1 in 342 million.
Yeah.
To win the Mega Millions, because that Powerball number at the end. I believe your average lottery is like 1 in 20 million if you're just playing the 7 numbers.
Yeah, I like those numbers.
But $1 billion is a lot, Scott. I know you're a man of financial smarts,
yeah.
And your answer's always, boring S&P 500 and they're just invest slowly and save. Yeah, like $1 billion, Scott. Did you play the lottery?
I don't. Yeah, so that's government promoted gambling, right? The government hates competition, and this is government. It's a tax cheat for the government. Whether you're the federal government or the state governments, they've found out that people like to gamble, and it's a great way to raise tax revenue without calling it tax revenue. But that's what I call it, the dumb tax.
A lot of people do, yeah.
Yeah, it is the dumb tax. Statistically, it's just you're not going to win, so just stop it. But
yeah, and generally it's the poor tax too, because
it is
lower income play. Yeah.
Oh, it's totally regressive because we know that I think that something like 40 or 50% of the tickets purchased for the Florida lottery are like 5% to 10% of the population, right? So there's a disproportionate, and those people are not people of means. When you go into the poorer area of any town or any community or any state or any county, they will sell a disproportionate number of tickets. And it's as you can tell, it's a tough one for me because if I'm being honest, it really annoys me because I think it's unfair to those people. And I know we say people have free will and they should be able to do whatever they want, but the reality is these are people that are often subsidized by other forms of government. And it's just an ugly circle, if you ask me. We're teaching people that they should strive for. We're promoting it. Apparently, there are ads because I see the signs out there, and a lot of people know the numbers. So I guess there's a place where you can see these things. I don't know where that place is. But we
need to get you to more seedy convenience stores.
Yes, apparently. Yeah, it's a thing that it's funny because I'm harboring ill will. I'm holding a grudge because when I remembered to the day, I actually wrote about this in my book. I remember the day the lottery came out in Florida and people were excited and I needed gas. I was going to an appointment and I was late. And I pulled up to a 7-Eleven that had a gas pump and I'm like, and back at that time, some of the pumps didn't have credit cards. So you had to literally go in and pay for your gas. And I was like, I got to hurry. I'm just going to throw $20 and go. And I walked up and there was like 70 people in a line at a 7-Eleven to buy lottery tickets. I couldn't have paid for gas if I wanted to. So I literally had to, because I was out of gas. I would have ran out of gas going to my appointment. I had to literally wait for like 35 minutes to pay for my gas because all these idiots were giving their money to 7-Eleven, right? Because, and I say giving it to it because that's what they were doing. They were giving, the funny thing to me, another funny thing is that people always have their numbers.
Oh, yeah.
They got like a plastic bag with their kids' birthdays and some special number, and they carry that bag and they buy the same numbers every single time.
That's the way the only reason my dad would remember my birthday.
Because the lottery
It's a
ticket.
lottery ticket number, he would use.
Did he ever win with your birthday?
No.
Well, see there.
In all forms.
It's your He was a loser all the way around with that date. So what was the question?
So you're not playing the lottery, but it does seem unfair to like poor people because they just get taxed so much because they generally tend to be the ones that are drinking more, smoking cigarettes.
Yep.
I only learned recently the level of tax on alcohol. I knew about the cigarette one where the reason cigarettes are like $11 is because it's bad for you, but alcohol is like a 50% tax on it as well.
It's the sin taxes, yeah. And we generally accept that because these things are not necessarily good for you.
Yeah.
And it's in this country, it's always a tough balancing act between people should be allowed to do what they want to do. But are we taking advantage of those people? Because if you are in a tough economic situation, you might want to have a drink. You might want to smoke your cigarette. And you don't want people telling you can't. And then we further burden them with the taxes on their vices. It's an ugly thing that we wrestle with. It's a nuanced argument, and I don't know the answer to it, quite frankly. But let's suffice to say I'm not playing the lottery, and it annoys me that it exists.
So when you're at home, your pastime isn't sit in a chair, smoke a cigarette, fifth of vodka, scratching lotto tickets.
No, I do all that.
Second question comes from John from Winter Haven. He says, I am looking to purchase a home right now, haha, in parentheses. But I was told I can use my 401k for a down payment of a home. Is this true, and would you recommend it?
That is true if it's a first-time home purchase, and I think the number used to be 10,000. I don't know the exact. It might have gone up in the most recent legislation to 15 or something. But as far as I know, it was at one point it was definitely 10,000. But it has to be a first-time home purchase. So, and it's a pain because you have to provide documentation, prove you're doing it. Each employer/sponsor of the plan, meaning if your plan's at Fidelity or John Hancock or wherever it is, they'll have their own documents that you have to fill out in triplicate and prove it and swear on a Bible and all that kind of stuff that you're actually a first-time home buyer, et cetera, et cetera. So, yeah, no, the reality is that is a thing. And is it a good idea? I think it's a neutral idea. I don't think it's a good or a bad idea. If you're taking $10,000 out of your 401k, which is an asset and an investment, to put in a house, which is an asset and an investment, then, yeah, I don't see the harm in it. Plus, you got to live somewhere.
I'm always confused on why a house is considered an asset as I just continue to pump money into this concrete nonsense where I'm like, oh, there's no way by the time I'm done that I'm going to make a profit unless the market goes insane like it is again. But
well, it's again
better than a car.
Well, yeah, it's way better than a car,
yeah.
And much easier to live in. So that's the point. You have to. We've talked about this a million times. If you ask most Americans who are of middle income type of capability, what their best investment is, they're going to say their home most of the time if they've been in it longer than 10 or 20 years. And the reason is because they can't sell it when it goes down. So if it has a bad market year, they can't sell their home because, well, they got to live somewhere, right? So they whether they like it or not, it's a buy and hold strategy, which always works out over a 10 or 15 or 20 or 30 year period. So yeah, it's a kind of a hole you dump money into, like they say about boats. It is expensive. The air conditioner goes out, and you have problems with the plumbing and whatever. There's a myriad of things that can go wrong with a home, and they usually do. But over time, if you buy a $200,000 house 30 years later, there's a pretty good chance you're going to dump $100 into it, and there's also a pretty good chance you'll sell it for $400,000 or $500,000. Not because you're brilliant, not because it's a great investment, just because that's how time works.
Gotta love that. Last question that I got is from Nick in Altamont, and this one is I think he's figured out the system because he goes, "Hey Scott, I'm a new investor. I'm 22, and with the recession about to start, this is the best time as a new investor. Yes." I like how he answers like with a yes.
Yes, he's self-answering.
But it would make sense because I read that and I was like, yeah, because if everything's super low, if you start at the bottom, it's only ups from here.
Well, it's not only ups, but it's eventually up, right? So it's going to go up and it's going to go down. So if you said, well, let's use example. So in 1999, 2000-ish, that was the tech wreck, right? Mm-hmm. If you just started investing in late 2000, bought everything that was smushed, you'd have done pretty well. If you'd have started buying stocks in January of 2009, you would have kicked butt. So were there better times? Was it perfect times? Is this the perfect time? Is this the ultimate bottom? Because remember, recessions in the stock market aren't the same thing. Now, it just so happens that we're in a questionable recession at this point. A
re-question.
What?
A re-question.
Yeah, we're in a re-question. And the truth of the matter is that the market is down. It's down 20-some-odd% from its highs, or give or take about 20 now. Yeah. We've recovered a little bit. And so this goes back to trying to call bottoms. The answer to the short answer is yes. This is a great time to get started. But know that you'll go through down periods again, and you shouldn't question your discipline when you do. But don't try to find the ultimate bottom. Well, it's at the S&P's at or the Dow's at 31,000. Maybe it'll be 28,000. Maybe 27,000. I don't know, but it was 36,000 and it's 31 and it's on sale. And don't outsmart yourself, right? So the answer to the question is yes. And as I'm fond of saying, the best time to invest is when you have the money. Waiting around for some sign or your horoscope to come together or the stars to align some certain way, or to find a horseshoe or a rabbit's foot or something. Just when you have the money, get the job done.
I think my next business investment will be a gentleman's club called the Ultimate Bottom.
Whoa!
This has been It's Only Money with Financial
Now there's a
Advisor.
moneymaker.
This has been It's Only Money with financial advisors Scott Brown and Tammy from Edgewater Family Wealth. If you want to get a hold of these gentlemen, Edgewater Family Wealth at Raymond James is the email, or go to the website to find out more information. Like I said, they have all of that awesome stuff on their blog as well, including Fin Talk with Tammy. I am Ryan, and this has been Scott.
Have a great Sunday.
And Tammy.
Have a great Sunday, too.
All right, we'll see you next Sunday on It's Only Money on Real Radio 104.1.
Yeah, and clearly people are rich, right? Or wealthy. You don't have to be rich. I like the term wealthy better. I mean, to rich reminds me of like the Monopoly guy or something. But, they're people, they're regular people.
Now that guy I trust. You
Yeah,
see, the problem, Scott, you don't have a monocle.
Monocle is, now, if you can meet a guy with a monocle, I mean, like, I'm all in.
What was his financial advice? He said buy Park Place?
Where is that?
Where is that? I can't find it.
Tune in to It's Only Money with Scott Brown from Edgewater Family Wealth, Sunday mornings at 7 on Real Radio 104.1. Raymond James Financial Services, Inc., member FINRA SIPC. Edgewater Family Wealth is not a broker-dealer, is independent of RJFS.